Okay? Understand it looks like this. Look anywhere in Google. A sharp uptrend followed by a descending channel. Once you break out of that channel, rockets. Sharp uptrend, descending channel, break out of that channel, rockets. Sharp uptrend. Look, descending channel. You see it? If you break out, rockets. Boom, you get the idea. All right, let's just go and see, not Bitcoin, but we're now looking at the total crypto market cap. On the daily, by the way, not no short time frame. This is your daily. Hey, what do you see here? I'm just curious. Does this look like a sharp uptrend to you? Absolutely. Does this look like a descending channel to you? Yes. Is that resistance? Yes. Is down here support? Yes. Is that resistance? Yes. Is down here support? Yes. Is that resistance? Yes. Is down here support? Yes. This is your entire crypto market cap. And let me help somebody out in case you don't understand how this works. You might want to truly put your seatbelt on because I showed you Bitcoin, but understand this. You see this blue dotted line? Pay attention, write it down, make a note. Anytime you rally up and get past this blue dotted line, you rally up to test the top side of this. If you fall down below this blue line, you will come testing the bottom side of this descending channel. Rallying up, getting past this blue line, you're testing the top side. Coming down, you lose the blue line, you're testing the bottom. Rally up, you get past it, rally it up. Hey, you get the idea, yeah? Hey, what do you see here? Help me out. Let me zoom in for you so you can truly see it, okay? What do you see what's going on here, guys? Right? We're literally starting to challenge this line right here. We're looking to see if we're going to start closing candles above this blue dotted line. Because guess what? If you don't, you already know, right? If you rally up here and you can't close candles above this, you're gonna come crashing back down. Right? Somebody say, yeah. If you do not get past this blue line, you're going to see this. Okay? Facts. So, don't we all have to pay attention to this together? Since we're looking at the total crypto market cap, don't we have to pay attention to this together? Unreal how crazy. It's unreal how this information I'm giving y'all. It's ridiculous. That's the total crypto market cap. The total one. That's crazy. That's cow. How are you that's just, bruh. I know. But watch this. Watch this. You might want to pay attention to this. Because my EMA ribbons are the truth, right now, total crypto market cap on the daily, you can see that we're literally, there's our descending channel here on my EMA ribbons, but you can clearly see that this is looking like it was starting to kink. This looking like it's starting to kink to challenge this middle of this line right here. But guess what? If I look at this on the 4-hour chart, somebody say, look, the smaller time interval, look at this. You see what's going on? This is what we're looking at. Now you're looking at it in more detail. You see the kink right here? This is severely crashing down. The market is crashing down. We're talking about billions of dollars being lost in that. Then you get this kink in the ribbon and it just starts pushing up and the ribbon start getting, look, the ribbon start getting tangled here. The market kind of moves sideways. Look, the ribbon's all tangled up, more can move it sideways. But see what's happening right here? You want to know why we got to pay close attention to this? Because this is looking like it wants to get bullish. Will it do something like this and then come back down? Well, look at the difference. Here, you had a bunch of these ribbons sitting on top of each other. They was kind of moving sideways. This is not sideways. Let me zoom in for you. You see that? That's not sideways. This is starting to push up and push out to where it's wanting to cross that blue. And that's why you're seeing this right here. Oh, shoot, I zoomed in too much. That's why you're seeing this happen. Remember, this is the total crypto market cap. This is not a little ass move. Understand this. When you move from here up here to where we are, 3.71%, this is a $2 trillion market cap. Let me explain to you what that means, guys. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Look, $2 trillion market cap. Watch this. If that's where we're sitting right now, and this is up 3.71%, let me subtract that so you can see how much money this has put into the market. Look, minus 3.71, right? Don't forget to hit the percent sign. Percent. Follow the bouncing ball. Hundreds of thousands, hundreds of millions, $77 billion. Hey, listen to me. $77 billion has came into the crypto market space. That's why you see this stuff happening on the daily. That's why you can go in here and you can start seeing, when you look at the top 100 cryptos, you can start to see that they're starting to wake up. On the weekly, you're starting to see them wake up because $77 billion has came into the market. And it is looking like it's wanting to be more because this is starting to look bullish. This is free game. This is absolute free game. People like me watching this, that's why people show up on these lives, because they be like, damn. Now, that's macro stuff. You understand that we're watching it for the bullish move that could potentially be coming here. By the way, for those of you that are new and those of you who have been on the live, this is what that XRP position looks like. Do you still think, is it anybody on here that still believes me that I know what I'm doing when it comes to trading that stuff? On the short term, just real quick, just... It's crazy. Let's look at the crypto cheat guide right now. All right, here we go. I'm gonna speed through this. I'm gonna make this clean. This will be really clean what I'm showing you. Understand that there's a link in my bio to grab this crypto cheat guide. You see up here where there's 150,000 likes on this particular live? Right, these are low numbers by the way. When we really get going, this community does 1.2 million likes. That is not cap. For anybody that's never been on these lives, when we hit 500,000 and 1 million likes, it is pandemonium because I really be going crazy on this thing. We hit 1 million likes on that stuff. Ask people, they'll tell you, or I'll show you some screenshots, but I'm not doing that right now. This is my crypto cheat guide. The link is in the bio. If you click up here where it says Calvin Hill, it'll bring up a picture in the center of your phone. Click that picture and it takes you directly into my my TikTok, where this book is at. Let's go over it, shall we? Here's the introduction to crypto basics. You probably should understand what cryptocurrency is before you start investing in it. Don't you think you should know what it is? What is cryptocurrency? Some people asking you why you invested in crypto and you don't even understand what it is. That's probably bad. You probably should understand the benefits of investing in crypto, like easy transactions, massive returns, access to a wide range of investment opportunities, direct control over your investments, inflation hedge, cross-border payments, markets open 24/7, unlike stock markets, which are closed, certain times of the week and stuff like that. No, ringing bells and shit. How does the blockchain technology work? Because it is a technology. Blockchain is a technology. Sitting on top of the blockchain technology is crypto, is DeFi, meaning decentralized finance, metaverse, right? Web3 gaming. You understand? Non-fungible tokens. All of that stuff sits on top of the blockchain technology. So you absolutely got to know what that is. We're just getting started. Chapter 1, I talked to you about crypto exchanges. Where should I buy my crypto? What exchange should I use and how much crypto should I buy? 3 considerations for picking an exchange: competitive fees, robust security, ample liquidity. Then you got top-rated exchanges that I mentioned there. That's probably important. Then I go here and give you some notable mentions. I explain the landscape of cryptocurrencies. That's all important. Understanding Bitcoin, Ethereum, and altcoins. These are 3 different things, okay? Bitcoin is the most decentralized. It's the first cryptocurrency. You might want to read about that. Ethereum is another significant player. Look, it's the second largest crypto, but it's the largest blockchain. This is the largest blockchain. Then you got altcoins. Anything that is not Bitcoin is considered an alternative coin or an altcoin. You might want to read about that. Cryptocurrency exchanges and how to use them. All of that's down there. All of that's there. Are you following? Are you tracking? Chapter 2, crypto portfolios, right? I don't know how to build a portfolio. How much? This is what the main questions of people that are new to crypto buy. I got $1,000. Where should I put $1,000? I got $10,000. Where should I buy? How much should I buy? Stop. Those are not the right questions. Those are horrible questions as a beginner and as in crypto, for sure. It'll get you absolutely wrecked. The most important question is, how do I balance a crypto portfolio and how do I make sure that it's diversified? Now you're on the right track. You see these green numbers over here? They represent balance. I promise you, if you add them up, they add up to 100%. 25% of your portfolio should be made up of Bitcoin. It is a store value, is Gold 2.0, it is digital gold. The fact that you don't have 25% of Bitcoin being held in your portfolio automatically tells you you've been doing it wrong. 35% of your portfolio should be in L1s. These have very large market caps. They have smart contracts. And these things right here have a lot, look, they have a lot of people backing them. They have big armies of people, big communities. Most of your developers are here and all kind of stuff. Venture capitalists, angel investors. This makes up majority of your portfolio. Facts. Then you start getting into the weeds. 10% in DeFi, 10% in non-fungible token, 10% in the metaverse, 8% in low and micro cap gems, and only 2% in meme coins. This is how you make up a well-balanced cryptocurrency portfolio. This is a fact. Then after you have your balance, you start going into diversification. What do you mean? You start going in and saying, okay, he's saying 35% should go into large caps. Okay, great. I'm gonna put 35% in Ethereum. Wrong. Diversify, mean 10% in Ethereum, maybe 10% in Solana, maybe 10% in XRP, maybe 5% in Algorand or HBAR. See, that'll be 10, 20, 35%. That gives you diversity because diversification, these things will pump at different intervals because they have different communities, they have different market sentiment, they have different everything. And so you want to be diversified and balanced so that you sleep well at night. It doesn't matter what's pumping. It doesn't matter what's doing well or what's doing bad. If you are balanced, you don't lose sleep at night. You won't be looking at your crypto portfolio every 5 minutes. If that's you, don't say that's me because I don't want nobody to even know it. You look at your crypto portfolio every 5 minutes and I'm down. Oh, I'm down 10%. Oh, I'm down 40%. Oh, I'm down. You constantly look at it. This is what will happen to you. Watch me show you how I can get rid of your anxiety. If you've been having anxiety in crypto, here's how I get rid of it. This page alone gets rid of that anxiety. Everything you see here that's listed here, I am tracking it, the Crypto Cheat Guide. So I'm tracking everything that I put in my ebook and you can see it live. Here's what most of y'all would do. In the last 5 minutes, look at those cryptos. You'll be looking at this and some of y'all be like, oh my God, my portfolio is down, man. You look at it over the last hour. Oh man, I'm down. You complaining. The last 24 hours, you all excited. You excited over the last 24 hours. Man, I'm up. And you showing everybody at work and shit, your mom and your daddy and all that. But over the last 7 days, you've been having a hissy fit. Because a lot of your stuff is still down and you only got a couple things. Man, you need to wake up. You need to wake up. Shiba, you need to wake up. You start talking like that. Look, over the last 30 days, oh my God. You've gone into absolute panic mode because you took all your investment that you invested and you sold everything. Why? Because you don't understand. Look at what they have done for the last 365 days for the year. You understand what I'm saying to you? So now you see them starting to wake up on the daily. If this continues to happen, the daily will push this thing into these things being bullish for the weekly. And if they become bullish on the weekly, it'll push them into being bullish on the monthly. And you don't worry about it. You could care less about what's up and what's down. At the end of the day, I'm making sure that you are a proper investor that is well balanced and diversified. You don't care. And if you look at that across the board, I can give you this just one more time here. If I look at something like my artificial intelligence projects, look at this. This looks terrible for the last hour, but I could care less of what they're doing for the last hour. Here's what they've done for the day. Okay, this kind of okay, but show me that week though. Show me the week. The week, they're down. Most of y'all will lose your shit if you invested in artificial intelligence and your portfolio was down 14, 15%. Here's where you really have a heart attack. 30 days, you're down 50%, 40, 50%. Oh my God. This guy doesn't know what he's talking about. Why are we following him? Until you look and see what they've done for the year. There's ebbs and flows. I don't care. I could care less what these things have done the last 30 days, last week. Whatever. I know what they've done over the last year. None of this matters. This is all noise. I'm too balanced and diversified. I don't look at my portfolio every single day, every week. Oh my God, oh my God, oh my God. Balance yourself. Make sure you are diversified. Do it the proper way. Once you're balanced and diversified and your crypto portfolio starts running up, there's a section in here, which I'm going to show you in a second, talking about rebalancing your portfolio. You want to make sure that you remain 25% Bitcoin. That means if you got some altcoins that run up and do something crazy, 100%, 2, 3, 4, 500%, and you're like, ooh, I'm going to ride it till the wheels fall off. No, you take it and you rebalance your portfolio. What do you need for store of value? Make sure that you remain 25% Bitcoin. Make sure you put some of that capital in those L1s to make sure you maintain 35% in L1s, your Avalanches, your Cardanos, your XRPs and stuff like that. Because when the market pulls back, they pull back less. It takes a lot of money to push up $1 trillion market cap in Bitcoin. It takes a lot of money to push up Ethereum, $300-400 billion. But in return, it also takes a lot of money to push them damn things down. So if your other altcoins went crazy and you have some of that rebalancing to those, you will be preserving more majority of your capital when the market pulls down. Somebody say balance and diversification. I might even name my dog and my cat balance and diversification. Come here, Balance. Come here, boy. Where's diversification at? I'm dead serious about that. Y'all laughing, but I'm serious. There's going to be some people out here naming they dogs and stuff, balance and diversification, because they ain't going to be forgetting this. Let's continue. As I'm doing this, I'm also reminding y'all of what's going on here with this position, in case you was on the live at the beginning when this was $200 some. Hey, that part. All right, let's go. Let's remember. Risk assessment is in this ebook. Link is in the bio. Understanding volatility. That's probably important. The importance of regulation. Well, Wall Street is here now. That means the SEC is involved in crypto now. What do you mean? Well, there's a spot Bitcoin ETF and there's an Ethereum ETF. That means BlackRock and Van Eck and Fidelity and ARK Invest 21 shares, and they can now buy crypto. And they're not going to be buying crypto if there's not some type of regulation. And there will continue to be regulation inside of this thing because it's getting to become a more mature asset class. This is not 2009 and 2010, guys, the wild goddamn West. No. This is now starting to become a mature asset class. It's $1 trillion Bitcoin market cap. Regulation is going to come in here for sure. It's already here and it's going to become more prevalent. Trust me. So make sure you understand the importance of regulation. Somebody said he's setting us up for success. This ebook's got to be the shit. Risk management strategies. I'm just going to name some of them. Diversify your portfolio. Do your research. Set clear investment goals. Use safe storage methods. Consider risk capital. Stuff like, look. I've been breaking all of this stuff down for you. Chapter 3. This is probably an important one. Creating your investment strategy. Defining your financial goals. The importance of diversification. There's something about that it keeps popping up. I literally went again further into it saying 5 diversification tips to remember. Like spreading across market caps, diversifying across use cases like smart contracts, privacy coins, DeFi, stable coins. This is probably important information that I got in here. Consider geographical diversification. What, different regions and countries? Hold up. You might want to read that. Keep track of technological developments, innovations, scalability, security, and stuff like that. Rebalance regularly. Wow. Review and adjust. Over time, the value of your individual crypto in your portfolio will change. Periodically review and adjust your holdings to, look, I underlined it. Maintain your desired allocation, ensuring you're not overly exposed to any single asset that can absolutely come in here and destroy your portfolio. Man, this stuff is good. Oh my God. Let's continue. This is in the ebook. This is in the ebook, active versus passive investing. I don't understand the difference. You do understand the difference. It's the same thing with investing. Did you go to work today? Did you punch a clock? Did you actually move some bottles around, drive a pallet jack, drive a truck, work on somebody's or pull some blood from somebody, send somebody to jail as a lawyer, whatever it is you do? That's active income. You actively had to do something and trade for some fiat currency, right? Active. Passive income is if you went and did something and you continue to get paid time after time after time. That's called passive income. There's the same thing with investing. There's a way to do active investing, look, and there's a way to do passive investing. That's probably important to read that page, I promise you. Chapter 4, crypto wallets. Look at the first sentence. This is crazy. If you are serious about creating wealth with cryptocurrency, you cannot, I capitalized every letter. You cannot leave your digital assets on exchanges. And then look at this. This is probably important here because if you understand anything about fonts and font sizes, understand that this is formatted very well. I took the time to bold certain words, serious and creating wealth, bold. I made this all capital right here. That means I'm formatting this. I turned this red. Remember this phrase. I highlighted this and understand that these fonts are a lot larger than these. This is probably a 20 or 25 point font. Not your keys, not your crypto. If you're buying crypto and it is sitting on an exchange, you don't actually own the crypto. You don't own it. They control your private keys. What do you mean when you say control your? Hold up. Slow down on that one. Hold up. Slow down. I bought my crypto. It's mine. Let me explain something to you about financial sector. If you don't understand the rules, none of your money is your money. None of it. If you go to work for someone and you're trading time for money, when they give you your paycheck, the first person that gets paid is the government, taxes. They take their money first. Then the 401k comes in and they take their money because they say, well, we know how to invest your money better than you. So 401k, we're going to put it in some stocks and some ETFs and blah, blah, blah. Everybody is getting paid before you. You get the leftovers. Then if you don't know what you're doing when you go to file your taxes to get some of that money back, they don't even give you all your money if you don't fill out the right paperwork. And wait for it, they're taking that money away from you all throughout the year, and they don't want to give it back to you until the next year, first quarter. And you think it's a come up because you got you got some money back in March or April. Fool, they took away from you all the last year, and you gotta wait till the next year, 3-4 months to get some money back, but you totally forgot. They was taking money from January 1st before you got that. It's not a come up. It absolutely is not. Oh my gosh. Somebody help me. Okay? Same thing when you put your money in the bank. You think that you're doing something good, and you are not doing something good. The bank considers that a liability. The first thing they do is take it and lend it back out to people at a higher interest rate than what they're paying you to keep it in the bank. They're paying you 0.01, 0.07% on a savings account. They're charging people 3% to 15% on mortgages, car loans, credit cards, and they can lend out up to 9 times what you put in. It's called fractional reserve banking. You put $1,000 in, they used to have to require to hold 10% of that 1,000 as what they called reserves. After COVID hit, they took away the reserves. They don't even have to have that in the bank, which means if you and everybody in your community run to the bank and say, give me my money, it ain't even in there. It's in the marketplace because they know what to do with your money better than you. I'm going to keep going. I'm going to keep going. Did you know that? So it's the same thing with crypto. You bought your crypto and, I trust the exchange. They got my back. No, they don't. The exchange is making money off of the fees that is incurring from people buying, selling, and trading on the exchange. It's not FDIC insured, okay? It's an exchange. It's meant to exchange shit. And that's what you do. You exchange for your crypto. You turn fiat currency into a digital asset, you make your exchange, and you pull it off the exchange. Otherwise, they're going to invest the money that they're making from you having your crypto in there and incurring fees and all of that stuff. And if they do it wrong, they're going to get a margin call. Uh-oh, there goes your crypto. They go bankrupt. Uh-oh, there goes your crypto. What are you talking about? It's my crypto. No, you have your crypto sitting on an exchange where the private keys are. All of our crypto is on the blockchain. Access to our crypto is private keys. And if you don't control your keys, you ain't driving nowhere. You didn't call an Uber or something, or you catching or hitchhiking or something. You got an expensive username and password is what you got. And some of y'all got username and passwords that's $1,000, $10,000, $100,000. Can you imagine that your username and password is worth hundreds or thousands of dollars and you don't control? No, stop. Let's turn this camera back around. Where's this ebook at again? Link is in the bio. Chapter 4, Crypto Wallets. Not your keys, not your cheese. And I'm not talking about Doritos. I'm talking about your money. You might want to go here to see how you can do and grab a nano. I don't know how it works. What are the type of crypto wallets? Hardware, software, paper. I give you pros and cons of both. Where to buy them, how to use them, breaking all of that down in the ebook. You got 2 videos you can watch. You got implementing 2-factor authentications. I'm just security after security after security after security after security, yo. You understand? That's why it's funny to me when somebody says to influencers, "Ooh, you stole my crypto. You took it away from me." No. If your crypto was on a ledger has never been hacked, ever. If your crypto was on an exchange, they would have to break into your exchange with your username and your password. And even if they did that, they couldn't get your crypto off because they would need a 2FA. They would need a string of numbers that's going to be on your phone that they have to have in order to actually get it off of there. That's simple stuff that's in the ebook. You realize that. Security on top of security on top of security on top of security. Anybody talking about they lost crypto to an influencer that they thought they was following, no, you didn't. They didn't steal it. You gave it to them. You gave your crypto to someone else because you wanted them to take your money and go to work for you. Newsflash, entrepreneurs and investors like myself, we refuse to work for you. So you absolutely didn't give it to me or another influencer because that makes no sense. Why would we work for you? I'm just keeping it real. Somebody say he's just keeping it real right now. Chapter 5, navigating bear and bull markets. It's probably important to understand what a bull market is, right? And what a bear market is. So I break that down. We're not talking about the Bulls and the Bears in Chicago, okay? They are who we thought they were. Wrong. This is not the United Center. We're talking about different Bulls and Bears, guys. Come on now. Keep it together. Key bullet points about crypto, bear, and bull markets. You might want to read these because these are cheat points. Aim to buy low and sell high, buy major dips. Average bearish market is 289 days. Average bull market around about 2.7 years. You understand how this stuff works. You'll know where you are in the cycle.